on our commanders, on our soldiers, our troops right now in terms of all the information coming at them, the decisions that they have to make increasingly faster. AI advanced tools are to enable them to do those jobs better, to clear the battlefield for them, if you will, so that they can make those human-based judgments consistent with our laws and our values.
When you start talking about the use of AI in the battlefield as opposed to in the procurement space, we're hearing wild stories about even what the F-47 with the ability to fly with its own fleet of drones. You have almost your own squadron with one man in the cockpit of an airplane. They can then communicate with ground forces, which is talking to people back home. To what extent is AI stitching all of this together?
It's AI. It's also a lot of other commercial tools that you may be familiar with.
Yeah.
You know, if you think of your phone or your tablet, it's on Wi-Fi, it's on cellular, it goes back to Wi-Fi, very seamless. When you think about the apps that are on your tablet, how they can seamlessly work together, share and exchange data. They're simple and easy to use. Like, that is the experience that we're delivering to our soldiers to enable them to conduct their missions effectively, the same as you or I use that kind of technology in everyday life.
Interesting. And to the extent that you're working with private contractors now, are you using the same companies that we're familiar with? I mean, do you get on the phone with CrowdStrike or Palo Alto, or are these defense contractors that are not household names?
No, we work with many different companies, increasingly more commercial-based companies. I mean, obviously, we've got a unique mission within the Army, within the Pentagon, but the concerns that we have, over security, for example, banks have similar concerns. Internet service providers have similar concerns. And so, by and large, we're working with commercial entities and tailoring what we need for our unique military operations.
Really interesting. Is it your job to buy Blackwells and Rubins? Do you have to go to NVIDIA and get these same AI chips that the private sector is drooling over?
Yeah, absolutely. We need AI chips, right? The question is whether do we need them, inherently within the military, or can we take advantage of those in a commercial setting?
Okay.
There are circumstances where we need capability, that's disconnected from the cloud or from anywhere else. We have a lot of contingencies that we need to plan for, and we're going to need chips like that in order to enable disconnected operations on the battlefield.
That's fascinating. So that means the Pentagon has data centers, is what you're saying.
We have less data centers than we used to, right?
Really?
Yes, we do.
Because
absolutely.
they are they're more efficient, or because you don't need as many?
Because
I guess that's the same question.
Because commercial providers can do that with some added layers of security. Really, what I'm talking about is when we are completely disconnected, we have no way of getting back to a data center, whether it's ours or commercial. We still need to give our soldiers the ability to conduct their missions and do that in a digital fashion.
Well, you've got an interesting situation. As I mentioned, you're Executive Director, U.S. Army Transformation and Training Command, knowing that the Defense Secretary, Pete Hegseth, has promoted reforms in acquisitions and procurement. What's it like still for you to walk into a room of top brass and maybe some of the gray hairs who are in the Pentagon to say that we don't need this weapon system to go to war maybe with China. We need this piece of software to protect ourselves. Are you being well received?
Absolutely.
So they know that this is required.
The reform efforts that I'm seeing, and I've got more than 20 years of experience working in procurements. I mean, this is really a once in a generation change in the way that we're doing business, right? We used to not buy software anywhere like the rest of the world does. And today, increasingly, we're doing kind of the Silicon Valley model. We've got a minimum viable product, getting it in hands of our soldiers as quickly as possible, iterating, improving it, and then scaling it immediately. It's vastly different than the way that we built systems in the past.
Yet we have a trillion, or I guess if the president gets his way, $1.5 trillion defense budget for the first time. Is that because we need all of the above? I would expect that technologies like these would be streamlining, creating efficiencies, and maybe making defense less expensive.
Yeah, I can't speak to the entire top line increase. I can tell you in the area that I work within information technology, there's a concept of tech debt, which is that you are so far in the past, in the core technology that you had, that you really need to reset yourself up to a modern level.
Said.
Absolutely.
Interesting. Yeah. Tell me more about that.
So, the Army digitized for the first time in the late 1990s. This is the same time the rest of the world was entering the digital era. The rest of the world has moved on. By and large, our soldiers, the equipment that they're using still has a lot of its capabilities that are rooted in that time.
Sure.
If you consider an 18-year-old who walks into one of our recruiting stations today,
they don't recognize it.
The iPhone is older than that person, right? Wow. So that's the scale of the gap that we're closing.
Don't say that. And then they sit down in front of this old DOS machine and they say, how do I work this, right?
So not for much longer.
Okay. Well, how much longer? What's your timeline and what are your goals?
Yeah. So our goal is to rapidly advance the state of technology. As I say, retire all of that tech debt, get modern capabilities that you're familiar with from your phone, your tablet. Give our soldiers the same kinds of things, because the underlying portions of that technology, the availability of the data, the ability to work together, it's already exists commercially. We've got some unique missions, but we're starting from the point of commercial. That's what's going to let us scale fast.
Wow. Imagine conducting procurement in the largest office building in the world. That's your job, right?
Yes, sir.
I'm glad you could come to tell your story, and we'd love to hear more as some of these technologies are identified. Joseph Welch, U.S. Army Transformation Training Command. We really appreciate the insights today. Thanks for being with us on Bloomberg.
Thanks, sir.
Anytime you can cross the Potomac to come see us, that'll be a good thing. I'm Joe Matthew in Washington, and I'll meet you back here on the late edition of Balance of Power. We'll keep tabs on what's happening in Davos and watching votes on funding bills in the House of Representatives 8 days out from a funding deadline. Not anyone is talking about a shutdown. Let me know if you hear. Bloomberg Business Week Daily is up next, live from New York. We'll have an update on stocks for you along the way. See you back here 5 p.m. Eastern, only on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Yes, indeed. This is Bloomberg Business Week Daily for this Thursday, January 22nd, 2026. We've got, Tim, a rally in big technology.
Yeah, we do. The NASDAQ 100 right now up about 0.8%. The S&P 500 up 0.7%. Charlie's going to have more in just a minute, but let's go through the list of why investors are buying today. Solid U.S. economic data.
Got it.
Geopolitics seemingly easing.
Yeah.
Okay. That's enough for a recipe for a little bit of a relief rally.
Yeah. Maybe not everything is awesome, but it's feeling better than it has maybe in the last couple of days. Hey, this hour, great lineup. ARK Invest, Kathy Wood on today's important economic historical moment, and also some big ideas for 2026. I'm really curious about AI and healthcare, but lots to get into with her.
Also, that economic data, what you need to know about today's economic data, which is impacting the trade.
That's why Mike McKee is at the table with us. Plus, Wall Street chiefs trying to lay low to avoid President Trump's trolling. Korn Ferry's vice chairman and what he's hearing from global leaders. And then Jack Smith.
He heads to Washington. All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, a check on the day's trade and top business stories. Here he is, Charlie Peller.
All right. Thank you very much, guys. Happy Thursday. Do want to begin with the developing business story headline right now, right off the Bloomberg Professional Service. Apple expanding the job of hardware chief John Ternus to include design work, solidifying his status as a leading contender to eventually succeed CEO Tim Cook. So again, we do have Apple shares advancing on that news. Right now we got Apple pushing higher by 1%. Stocks are advancing. Number of reasons going on here. Cooling of geopolitical tensions. We got a rally in big tech. Also solid economic data this morning. The Dow, the S&P, NASDAQ 100 index, all advancing. S&P up 0.7%, higher by 50, back at 69.26. The Dow up 454, up 0.9. NASDAQ up by 1%. NASDAQ 100 index up by 0.8%. And the Russell 2000 index of small cap shares up by 1.1%. Small caps, by the way, beating the S&P for a 14th straight session. 10-year 4.24% with a 2-year 3.61%. Gold now up $85 the ounce to $49.17. Spot gold up 1.8%. Silver is surging by 3.3%, $96.14 the ounce, and a retreat for crude down 2.3%, $59.25 a barrel. Bitcoin down 1.2%, 89,061 right now on Bitcoin. President Trump is suing J.P. Morgan Chase and CEO Jamie Dimon for at least $5 billion over allegations that the lender stopped offering him and his businesses banking services for political reasons. J.P. Morgan Chase up now by just about 1%. And Bank of America and Citigroup are exploring options they could offer up as an olive branch to satisfy President Trump's demand to cap credit card interest rates at 10% for 1 year. Both banks are pushing higher. Citigroup up 1.9%, Bank of America up by 1.2%. Again, repeating our top story at this hour, Apple expanding the job of hardware chief John Ternus to include design work, solidifying his status as a leading contender to eventually succeed CEO Tim Cook. And that is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Let's get to today's data drop. U.S. economy expanding the third quarter by slightly more than initially reported. Stronger exports, a smaller drag from inventories. GDP report also showed that the central bank's preferred inflation metric, we've been waiting for this, the personal consumption expenditures price index, ex food and energy, Tim, rose an unrevised 2.9% in the third quarter.
Breaking down the report and the rest of today's data and more, Bloomberg TV and radio international economics and policy correspondent Michael McKee is here in the Bloomberg Business Week studio. Mike, the data that mattered today is all about the inflation data?
It's all about the inflation data, but not the one Carol mentioned. That was the third quarter. That's an average of what the inflation rates were in July.
I
August,
left it
and
for
September.
you to do the great reveal.
All right. The great reveal is what do we get for October and November? We had no October PCE because we had no September, no October CPI or PPI.
Right.
So we got both this month, and really what matters is the November number.
Okay. I'm so confused now.
Wait, when do things get back to normal? Like, when are we going to talk about this data where it's not truncated in some way? It's not. I don't mean, by the way, it's not an existential question. When do you think get back to normal?
Is
what
it,
I mean is like,
right now.
Because I saw the way you looked at me and you're like, I'm not going to answer that question.
So
when does the data get back to
is inflation a problem?
Inflation's a problem. We're getting there,
folks.
and probably by next month we'll get the data, what we're supposed to get, when we're supposed to get it.
Okay.
We don't have the December PCE yet, which is what would really matter because that's the most recent month. That's coming out in a few weeks. But what we do have is the November number, and the November number was for the month. For the headline was 2.7%. And the year over year for the core was 2.7%. So those are down just a little bit from what they were in September, but they're still high enough that you got to be concerned about it. The Fed is not looking for inflation to stay that high, but they're not going to assume a problem until they see if it's continued to go up in December, and we'll see what happens in January. And remember, they've suggested that they think inflation will rise because delayed tariff impact, at least in the first couple of months of the year.
I will say, an executive at McCormick, the spice company, today says we still haven't passed through all of the tariff impact to consumers.
We hear that a lot.
The company reported results
more
today.
to come.
Yeah.
Well, I saw a story on the projections for earnings in the fourth quarter that said, looking back, what a lot of analysts are hearing is that keeping costs under control was very important for CEOs. Well, that's something that you have to watch because there's only a couple ways to do that. One is to raise prices, and one is to cut expenses, which usually means cutting employees. So we'll have to see what the impact of that is. So far, we got jobless claims again today, 200,000. It was 199 last week. Very, very low. So it doesn't look like they're turning to that cutting employees part yet.
Hey, is it still tricky for the Fed on both sides of the mandate, meaning the job market? And also in terms of inflation, we've heard that from Jay Powell over several meetings now, right? That it's just risk on both sides. Is it still the case?
Yeah, it's risk on both sides. And I was asked earlier about this, and I think what you'll see maybe at the Fed meeting next week is that the emphasis they have placed on jobs will move more back to the center on both of them, because they've got to have to acknowledge that inflation is still higher than they want it to, and they can't really say, well, the job market's falling apart, because the data we have don't suggest that.
Right.
How does Jay Powell next week thread the needle on all the questions he's going to get about the DOJ investigation, about him going to the Supreme Court to support Lisa Cook? I know he's going to have prepared questions for this, Mike, but I feel like things are a bit different at this next meeting than they have been.
Well, one of the interesting questions will be, will the first question be about the monetary policy decision they made, or will the first question be about Donald
Are we doing
Trump?
prediction markets now?
We're doing prediction markets now. I think
Wait. Or will they be about?
Donald Trump.
Okay. Raise the hands. What do you think? I'm thinking it's about Donald Trump.
All right. So if I get called on first, I'll tell them that you told me to ask the question. I think what Powell will probably say is that something along the lines of, Fed independence is very, very important, but I've said all I'm going to say about myself at this point. Because otherwise, the odds are he's going to spend an hour talking about Donald Trump as opposed to monetary policy and things like that. And that's not what he wants to do.
Right. And for those who are listening on radio at that moment, Tim and I both raised our hands that we thought it was going to be Trump. Hey, just 30 seconds real quick. We're going to hear from Bank of America CEO Brian Moynihan in just a moment on the president's call to cap credit card rates at 10%. Credit card cap, something economists watch in terms of how that might possibly help or hurt spending. The bank CEOs are all saying it could potentially reduce credit availability. But
I think that general feeling is it could reduce credit availability because it's not in the financial interest of the banks to do that.
Okay.
And so it could be a problem for the economy. I saw a note that some of the banks are considering it, but really what it is who's going to get the card? Is it the people who pay their bills off every month, in which case it doesn't matter?
Right.
But if you're a low-income person, you're not going to get 10%.
All right, great stuff. And we're going to talk a bit more about the economy with Kathy Wood, because she, some of the research out says that we're in an interesting historical economic moment in time. So we're going to talk about that in the next block. Mike McKee, thank you as always, Bloomberg TV and Radio International Economics and Policy Correspondent Mike McKee. So we're going to talk a little bit more about this cap on credit card rates.
Yeah, just a few hours ago, a headline crossing the Bloomberg, it noted that Bank of America and Citigroup are exploring options they could offer up as an olive branch to satisfy President Trump's demand to cap credit card interest rates at 10% for 1 year. Carol, both banks are separately mulling offering cards with a 10% rate as one potential solution. This, according to people familiar with the matter who asked not to be identified, citing private information.
Our Bloomberg News team say while representatives for B of A and Citi declined to comment, the Bloomberg TV surveillance team caught up with Bank of America CEO Brian Moynihan earlier this morning from Davos. They talked about President Trump's call for lowering the rates on credit cards.
If you step back, we're all for affordability in financial products. So you guys have followed over the years what we did on overdraft fees, taking down by 90% over a course of 15 years. What we did on having a $500 loan account for $5, no interest rate, you could borrow an emergency loan of $500. 8 million customers have used that over the last several years, to give you a sense. So, and then we have a no frills credit card, no rewards and other stuff that people might attribute. That is low rate. It's not all the way down at that rate. So I think the question is, can we figure out a solution where you can avoid the equal and opposite reaction, as our friend Lafayette said in the Hamilton song. Every action has an equal and opposite reaction. So the equal and opposite reaction we all talked about last week. If you actually make this a policy, it can reallocate credit. That will slow down spending. It will slow down credit availability, and that might not be what you're trying to achieve. So can you do something on a go-forward basis, on unlimited things? And even 1 year, if you had to go reshuffle the whole deck, that would be pretty interesting and to cause a lot of change in people's views of what they have available for credit. And you want people to have available for credit because that gives them the courage to spend. And so we're trying to figure out, we're all working, trying to figure out, okay, given the affordability, given the thought process, is a way that we can do something that might help without having that equal and opposite reaction, because that would not be good. Our point is to get the credit losses down to the point where you can afford that rate, you actually can never have a charge off. And you start to think about who can get credit.
All right, that, of course, Bloomberg TV's surveillance team catching up with the CEO of Bank of America, Brian Moynihan. That full conversation, find it on the Bloomberg and at Bloomberg.com. Just want to mention, shares at B of A, they're up about 1.25% in today's session, and Citi up about 1.8%, even following that headline that came out about that they're considering potentially, according to our reporting. I will point out those stocks that were off their highs of the session.
But I think it's bank's job is to calculate risk.
Absolutely.
So it's like, are you going to give a product to somebody that doesn't have the credit history that offers a favorable rate?
And I guess I would argue that some of these onerous credit card rates make it really hard for people to develop credit history. And so is there a happy meeting ground in terms of maybe not 10%, but maybe not over 20%. I mean, I'm not quite sure what the answer is, but we talk so much against and about the unbanked. Actually, we're going to talk about the unbanked with Jamie Dimon and the president a little bit later on this hour. All right, to Washington and Capitol Hill we go, where former special counsel Jack Smith, he led probes of President Trump's actions, secured indictments against the president, getting his day in court. In fact, right now, as we speak, Jack Smith is up on Capitol Hill taking questions from the House Judiciary. Keep in mind, he spent more than 8 hours last month behind closed doors with the committee. He is back today. He's talking about lawmakers that the president is unfairly seeking retribution against prosecutors and FBI agents who worked on his investigations. Again, that is the live testimony of Jack Smith, as you can see, and for those who are listening on radio, before the House Judiciary Committee.
With more, Bloomberg News Justice Department reporter Chris Strome joins us with us. He's from Washington, D.C. right now. Why is Jack Smith, Chris, there today?
Well, it's common practice for a special counsel to testify before Congress after they complete their work. In this case, though, Jack Smith's work has been largely buried. He was never allowed to go to court. Part of his investigation has never been made public, dealing with the classified documents case against Trump. He testified in private last month, and now he's getting the chance to come before the public. And it's a really fascinating insight into how his investigation unfolded. And for him, it's really the first time that he's able to come and present himself publicly, there's been a lot of questions about, who this person is, and nobody's ever even really heard him speak publicly before.
And what's interesting, this comes after the 8 hours he spent in December, early December, behind closed doors, talking to this committee. That full transcript and video was released New Year's Eve, right? And there was a lot going on in this world. Is there anything, though, that we gleaned from that is helpful in kind of understanding what Jack Smith might ultimately share with not just the committee, but the public at large here?
Well, the private deposition and today's public hearing is kind of it's a split screen. It's kind of a window into two different worlds. Republicans want to really focus on the process by which Smith, carried out his work, and Democrats want to focus on the findings. And so a lot of what Smith is, stating is material that he put into his indictments. And so there's not a lot that's new there. But Republicans are really kind of seizing on some of the more controversial steps that Smith took, such as getting phone records from members of Congress. And we hadn't really heard a lot about that until now, where Republicans are questioning, why Smith would have gotten phone records from members of Congress. And it's really given Smith the ability to explain that he didn't want to go get phone records, but Trump made phone calls to these people. And so as part of the investigation, he needed to get the phone records. And he was able to clarify that these were just records that indicated who called who and for what period of time, but there was no content involved. And Smith said that he followed the law at all steps.
Chris, in an environment where we are sometimes often talking about moves being political, and some would say that it applies to every party that's out there in different administrations, maybe to different degrees. You mentioned the Republicans are focusing on the process here, Democrats on the findings. I would argue that both are important, right? In an environment where we want a Department of Justice to not be political and to really pursue matters in the best interests of Americans.
Absolutely. And Smith is repeating that he believes everything he did was justified and following DOJ, policy, following well-established rules. Republicans are trying to damage him by making, some statements about how he acted in terms of trying to get things to trial faster than might have been normal because the election was coming up. And so, you kind of have these two sides battling back and forth over the findings.
Just in the last minute we have with you, Chris, the final outcome here, how does this end? What does it ultimately mean for the president, and what does it ultimately mean for Jack Smith?
Well, it's interesting because one of the things that, Smith, made a point of, there's been a campaign of retribution that has been carried out by the Trump administration against people who worked on his team. A lot of people at the Justice Department who touched the special counsel investigation were fired. And he said that, it's wrong for Trump to go forward with retribution against people who were just doing their jobs. And right as he was testifying, Trump put out a Truth Social post that actually asked the Attorney General to go get revenge against Smith and his people.
All right, got to leave it there. Hey, Chris, thank you so much. Chris Strom, he's Bloomberg News Justice Department reporter. We'll continue to monitor that hearing up on Capitol Hill. Coming up next, ARK Invest's Kathy Wood on everything from Elon to why we're at an important time.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ all advancing right now. S&P up 54, 69.29 where we stand. That is a gain right now of about 0.8%. The Dow up 462, higher now by 0.9%. NASDAQ up 261, NASDAQ up by 1.1%. The Bloomberg Mag 7 index up by 2.3%. The Russell 2000 index of small cap shares up now by 1.1%. Bottom line here, stocks are climbing amid signs that the U.S. economy is holding up. 10-year, 4.25%. Gold is surging $89 the ounce, up 1.9%, 49.21. Silver up 3.3%, 96.14 for an ounce of silver. West Texas Intermediate crude down 2.2%, 59.28 the ounce, and Bitcoin down 1%, 89,302. JP Morgan says buy the dip in European defense stocks after President Trump's comments this week. Among some of those names, Rheinmetall down now by 3.9%. BAE Systems trading lower by 3.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Carol Master, along with Tim Stanovic, live here at Bloomberg headquarters in New York City. Well, 2026, as you know, off and running, follows 3 years of double-digit gains for the S&P 500, a total gain of around 80% over those 3 years. 3 years of back-to-back gains as well. That's the S&P. 3 years of back-to-back gains also for the NASDAQ 100, a total gain of about 130% there. And yet, even with the stock market gains in the U.S. in 2025 last year, measured against equities worldwide minus the U.S., stocks have risen around 30%, roughly double the S&P 500's gain. That's according to the MSCI's index. Here to talk about 2026, the economy, investment ideas. Great to have back with us the founder, CEO, and CIO of ARK Invest, Kathy Wood. She joins us from St. Petersburg, Florida. Kathy, great to have you here. Happy New Year.
Happy New Year, Carol and Tim. Very happy to be here again.
Well, it's great to have you here. And I want to start with what stocks did here in the U.S. really well last year. But if you look at global stocks, you could say that there was certainly some underperformance by the U.S. You've invested in a lot of U.S. names, but also a lot outside the U.S. And I think about Chinese companies, BYD, Baidu, Alibaba. Are you looking for more opportunities outside the U.S. at this point? And I wonder if you think it's time for maybe U.S. stocks to take a little bit of a breather after 3 years of double-digit gains?
Well, I think we're very focused on the deregulation, lower taxes, and what we believe will be lower inflation, much lower inflation, and lower interest rates in the U.S. And we think the combination of those is actually going to drive the returns on invested capital in the U.S. up relative to those in the rest of the world. And I think many people are underestimating, especially on the corporate tax side, that thanks to the new depreciation schedules, our effective corporate tax rate, not the statutory, but the effective, will drop to one of the lowest in the world at roughly 10%. Certainly near a record low for the U.S.
So do you think, Kathy, that's not priced in yet to U.S. equities? Like, have investors not realized that, and therefore it's not priced in yet?
You know, it's very interesting. Maybe a lot of your guests have been talking about the depreciation schedules, how massively they are going to encourage capital investment here in the United States. So we've never had full depreciation in year one of manufacturing facilities, full depreciation in the first year of service. That means corporations will get huge tax refunds that they will be able to reinvest into innovation, because we also equipment, domestic R&D, and software. Those three, full depreciation, first year of service, that has been legislated. Normally we get, a few years of this, this cut and that cut, but that has been legislated. Now it's all the time. So we don't think people understand how profound some of these tax changes are.
So what does that mean for something like the AI trade specifically, Kathy, where I think people are worried about pockets of it with being in a bit of a bubble? Does it benefit everyone who is somehow associated, whether it's the chip companies, whether it's the energy companies? Do you see the benefits playing out there and giving it more room to move to the upside?
Absolutely. Absolutely. I mean, we're having huge build outs of data centers and power facilities. All of that, all of those depreciation schedules will apply to this boom in investment and contribute to it. So, yes. And in fact, Carol,
please.
I was just going to say, many people think we're in a bubble. And yes, the data center spending last year was about $500 billion. And you can see all of this in our Big Ideas report. We just released it yesterday. And thank you, Bloomberg, for featuring it. But $500 billion is a 2.5 times increase from where it had been trending for years. So big increase, no doubt about it. But we think that number needs to go to 1.4 trillion in the next 5 years to accommodate the AI boom that is now underway and is going to drive productivity gains incredibly.
I want to get into that in just a moment. I'm really also interested in the healthcare aspect of it because I feel like there's a lot going on. Before we do so, we also have your 2026 outlook. And what's interesting is you note that this is an important economic historical moment. How so?
Well, we are in a technology revolution. And many people thought that the internet was a technology revolution, and to some extent it was. But today, instead of just one major platform evolving, we have 5. So robotics, energy storage, AI, blockchain technology, and multiomic sequencing in the life science space, which we believe is the most profound application of AI, healthcare. And so this boom, if you look back at the railroad boom, the amount of investment that we saw back then was about 6% of GDP at its peak, 5 to 6%. The internet boom was more like the auto boom in the early 1900s. It was more in the 3 to 4% of GDP range. We believe this 5 platform innovation strategy or boom is going to move to 12% of GDP. And we do believe also that productivity growth will accelerate to the 4 to 6% range and be sustained there. Normally we see a cyclical peak around there and then it falls back. We think it will be sustained, and we think that by the end of this decade, real GDP growth could be averaging more than 7% per year. Wow. And I know that sounds shocking, given that we've been at 3% for 125 years. But it is the history associated with technology revolutions, a step change up in GDP growth.
The productivity increase, the GDP growth that you are forecasting as a result of these disruptive technologies, to what extent is that the result of fewer people doing more? My question is about job losses as a result of this technology, because if everything that investors are betting on when it comes to this AI revolution comes true, it means that companies aren't going to need as many people to do a lot more. What does that look like?
Well, GDP growth at 7% plus per year tells you there's going to be a lot of economic activity, more economic activity from a sustained growth point of view than we've seen in quite some time. The history of technology is it's a net job creator. In the early 90s, when developers were evolving the internet, we could not have imagined Uber or Airbnb back then. And I think the same is true now. We cannot imagine the kinds of jobs that are going to exist in the future. And the other thing that we're excited about from a job creation point of view is we're seeing new worlds being created. And by that, I mean, most of us think about Earth, but now we're moving into space. Even data centers, we think, Elon leading that charge, will start moving into space. And we won't have the not in my backyard and the bureaucracy associated with data centers. There's going to be huge job creation around the space exploration and all of the opportunities out there. And then the other one, and you'll find this in our digital assets section of Big Ideas, is the digital world, immutable private property rights. We know from economic history, the best way to lift people and countries out of poverty is with private property rights that are immutable. Well, that is now moving into the digital world for the first time, thanks to blockchain technology. So we're not worried about job creation, but for those who are, because there is something happening that I know is concerning to many people, the unemployment rate for 16 to 24-year-olds has moved to 12%. 12%, big increase. And what is that saying? That's saying that entry-level jobs are not being created the way they used to be. To those people, I say, you must have in your mind an idea for a new business, something that frustrates you, an unmet need. Well, now you can go to ChatGPT, you can go to Grok, and you can have an assistant help you build out that business. Just interview for jobs, but also think about new business ideas. I think we're going to see entrepreneurial explosion here.
Well, and, speaking of entrepreneurial explosion, I think about, how long you have certainly been with Tesla and a backer of Elon Musk, a long time. And I think about, when we first talked and you likened him to Mr. Einstein, Albert Einstein. But I just wonder, Elon at Davos earlier today, and he talked about the car makers' fortunes will be increasingly dependent on humanoid machines. Kathy, how are you modeling this? I mean, into the thesis of Tesla. And is that where the growth is more so than EVs for Tesla going forward?
Without a doubt. We've always said Tesla is not an auto company. It is actually the convergence of three of the platforms I mentioned. So robotics, energy storage, and AI. Each one of those technologies, it has its own S-curve. And now they're feeding each other, and we're seeing that in robotaxis. Robotaxis, we believe, will account for 90% of Tesla's valuation by the end of the decade. We're in print at 2,600. That includes nothing for Optimus robots. And we're beginning to understand how quickly Tesla is moving on that front. Why? Because it's the convergence of the same three technologies, robotics, energy storage, and AI. So I think that price target, obviously, if Optimus is successful, and we believe it will be, we think that humanoid robots is evolving into a $26 trillion opportunity, half in the home, half in manufacturing plants.
We're speaking with Kathy Wood, CEO and CIO of ARK Invest. Kathy, you mentioned Tesla. We're talking about Tesla, the regulatory environment. Certainly, it's a less favorable regulatory environment for Tesla than it was just a few years ago, just 2 years ago, just 1 year ago. You also talked about the Trump administration and the ease of regulations that we're going to see through the Trump administration. You've talked about that with us in the past. I'm wondering, a year into his presidency, what do you still want to see in terms of deregulation? What have you not seen yet that you want to see?
Well, I think it's constant chipping away. In his first administration, I think President Trump said, for every regulation you put in place, you have to take away two. And so it's a mindset in this administration. And I think we have it. We're seeing amazing deregulation in the healthcare on the healthcare front. And I don't think many people understand that that the FDA has decided that animal testing is no longer necessary for monoclonal antibodies. And I don't think they're as aware of how the FDA is harnessing AI itself and encouraging the companies it regulates to start using AI. So I think it's a mindset shift, and I think it is happening. I think the most profound deregulation is taking place in the energy realm, and that's not just oil and gas and so forth. It's nuclear. If we, in the 70s, had not started regulating nuclear the way we did and driving construction costs up, electricity prices today would be 40% lower than they are. And so we think as nuclear comes on stream, that it will serve to take some of the edge off of the increase to electricity prices that data centers are causing now.
Hey, Kathy, just big broad in terms of, all of the different funds that you have and the exposure. I'm just curious where you're seeing flows in and out. We've done some reporting on this, and we know some of your funds certainly showing some interest among investors, but we also talked about earlier this week about some of the withdrawals from the ARC Innovation. What can you tell us specifically when it comes to flows and performance so far this year? What's working? What are investors interested in?
Well, we have had year to date, I think our ETFs have roughly $1 billion in inflows, heavily skewed to space exploration and defense for obvious reasons. And then autonomous technology and robotics. I think that autonomous taxis and drones, very big parts of that fund as well. And then our flagship strategy is also starting to inflow. It had been held down by the multi-omics theme. So this is what we used to call the genomic revolution. And it was a very difficult space, even though the innovation was taking place. The investment markets were not interested in it for a couple of reasons. One, lots of investment necessary, therefore not very high, if any, cash flows, and the cash cushions needed to be built up. We think they've done a lot in the last few years to become more efficient. And so we're beginning to see outperformance from that space as well, because now many people are beginning to understand we're seeing cures to disease. We're seeing early diagnosis thanks to AI and sequencing technologies. I
want to pursue this further with you at a later date and some of the companies that are in that. Just 30 seconds. So what's your best idea, you think, for 2026 at this point? And I know there's a lot in your research, but is there a best idea or narrative? Just quickly, if you could.
Well, so the top 3 stocks in our flagship are Tesla. We think it has miles to go. We do take profits from time to time, but it could break out here in a big way as more and more analysts do their homework on robo-taxis. CRISPR Therapeutics has moved into the second position. That company is curing sickle cell disease and beta thalassemia and has its eyes set on not just rare diseases, but curing the bad cholesterol problem, especially for those who have hereditary issues in that realm. That could be an enormous market, and I don't think anyone is doing the modeling work there the way we are.
I love it. All right. Hopefully we can check back with you as the year plays out. Kathy, thank you so much. Really appreciate it. Kathy Wood, of course, Be Well, former founder, CEO, of course, and CIO of ARK Invest, joining us from Florida. I just was doing a quick check on ARK Invest, and we're looking at the ETF up about 2.6% in today's session. It's up about 4% year to date.
Yeah, outperformed the S&P 500 last year. In the last year, up 32% in the last year versus the S&P 500 up about 14%.
This is what I want to talk more about, multi-op.
We're going to have to put a pin in that for a second. As we were having that discussion with Kathy, we got a red headline from the terminal. Democratic Senator Amy Klobuchar has filed paperwork to run for Minnesota governor. This according to a filing. Amy Klobuchar files paperwork to run for Minnesota governor.
All right, let's get back to the markets. Overall, we are seeing stocks hovering near their best levels of the session. Let's head on over to Charlie Pellet once more.
Thank you very much, Carol and Tim. Here's what's going on. The Dow, the S&P, NASDAQ, all moving higher, as Carol mentioned, close to session highs right now on the S&P, up 48. That is a gain of just about 0.7%. Number of reasons for the advance right now: cooling of geopolitical tensions. We got a rally in big tech. Also, solid economic data this morning, with the Dow now up 401, up by about 0.8%. NASDAQ up 242. That is a gain of 1%. NASDAQ 100 index up 0.8. The Russell 2000 index up now by 1%. 10-year at 4.24%, with the 2-year that's yielding 3.60%. Gold is up $84 the ounce to $49.16, up 1.7%. Silver with a $95 handle, closing it on 96, 95.82 right now on silver, up by 3%. West Texas Intermediate crude down 2.1%, 59.32 a barrel, and Bitcoin down 0.5%. Bitcoin right now 89,740. In the auto industry, GM plans to move production of its next generation Buick Envision compact SUV, which is currently built in China, to a plant in Kansas in 2028, a sign of the pressure automakers are under to reshore output of vehicles sold in the United States. General Motors shares up today by 0.6%. Rival Ford down 0.2. Stellantis lower now by 1.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we recently caught up with the economic Nobel laureate, Daron Acemoglu, who was in a Bloomberg Opinion column arguing that there is a unified theory behind President Trump's actions, one rooted in leverage, disruption, and a willingness to weaken institutions in order to strengthen negotiating power. That's one view. And then another came today from Davos.
Yeah, Stifel Financial CEO Ron Krasuski weighing in on President Trump's approach to Greenland at the World Economic Forum this past week.
Democratic versus Republican, start there, all right? We're going to start 50% of the people are not going to like something that you say, no matter what you say. And so the substance and the economic things I do like. The style is, frankly, it's effective in many ways. I mean, people, they were literally surprised. And I sat there and said, you know what he's going to do? He's going to throw it against the wall, and you all are going to react crazy. And then he's going to come and say, okay, what do you want to do?
Let's make a deal.
People in Davos here should read it. It's an art of the deal.
All right, the art of the deal. That is from the Stifel Financial CEO, Ron Krasuski. Now, curious about what our next guest has to say about how global leaders are navigating the actions of the White House. Our next guest advises clients from Fortune 500 companies, nonprofits, and sovereign wealth funds, has done this through numerous business cycles, market cycles. He writes about it all. He's Alan Guarino, back with us, vice chairman of Korn Ferry. His new book, Greatness Code, the formula behind unstoppable success. And we have it. We're going to talk about the book. How are you?
Great. Good to be back.
It's good to have you here. And we want to talk about the book. And you guys really look at companies and who's doing it well. And so I guess the first thing we were thinking about, though, when you were coming on is all of these leaders trying to navigate what is a tricky administration and not wanting to show up on the presidential radar. I'm curious what you are hearing from global leaders, because we have a story about Wall Street folks in Davos laying low and being very careful about what they say.
Understood, Carol. You know, it's really tricky, right? It's a very dynamic environment. There are sometimes, you could say that the rules have been rewritten and there are no rules. I think we just default to what we all know, because administrations come and administrations go. What's uniform is companies don't like uncertainty. And so to the extent that political leadership can be consistent, transparent, and give companies enough sense that they can see into the future so that they can make strategic decisions on growth, then things are fine. And I think if that's not the case, to the extent that an administration is part of that, and there's a lot of dynamics that create uncertainty,
right?
Then it's a problem. I don't have a direct opinion on what's happening today, but what I am hearing is that people want leaders want certainty so they know where to invest and how to invest.
I think the challenge right now might be, and we have a few examples of this, if you're a defense contracting CEO and you get an edict from the president on social media that says, you got to invest more in the US, we're capping your pay at $5 million and you're not building things quick enough. Or you are, I don't know, the CEO of a publicly traded company that buys single family homes, an institutional investor. And you get an edict, an executive order from the president this week that says no more of this. You're the CEO of Coca-Cola and you find out, you got to redo your formula to include real sugar and take out high fructose corn syrup. Like, that stuff is coming at a surprise to these CEOs.
Or should you not do it because you think in 2 years the White House could change?
Great question. So I guess the answer is you don't do what you can get away with if it's not good for your business.
Interesting.
And you do what you have to do. And you're bringing great examples up that are business dynamics that are created by governmental action. And by the way, we had this for a long time, especially on Wall Street and in pharma. Government actions in regulation sometimes is not so consistent and makes things difficult. But the fact is that CEOs and leaders get all kinds of things thrown at them every day from a lot of constituencies. So the leadership today, the key word is nimble.
All right. I love that. And I want to, bring in, because there's a survey out, this is from Fortune, about some of the top companies that are out there. Apple, once again, top of the list. And I'm curious, what constitutes being an admired company in this environment or just in general?
Yeah. So Korn Ferry is really proud of being involved with Fortune for many years in this fabulous program. We could spend hours, so I'm going to give you a quick summary. Basically, Fortune looks at 1,000 companies, the Fortune 1,000, and they also look at what's called the Global 500. And the way they look at it is they with our partnership, they query about 3,500 executives across the world. And those executives weigh in on various categories. And it is something you can't game. And they weighing in on their perspective magically produces a ranking. And that ranking turns to be about 300 or so companies. The top 50 are typically the one that's most published and most admired. And then of course you have the top 10, which this year and for many years has been dominated by tech, but you have others like American Express in the top 10. And so it's a very empirical, objective methodology. And the beauty of it is it's not chosen by people who have an agenda. It's chosen by individuals who talk about other companies. And by the way, it's broken down into 45 different industries.
Yeah.
So the rankings are by industry. The rankings then are the top 50 by score regardless of industries. It's very, 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 very powerful report.
Female CEOs leading 10% of the most admired companies. We knew women were great. Hey, just before we go, and forgive us, only 45 seconds. You're going to have to come back. Greatness Code. What do we need to know?
Greatness Code. I wrote it because I felt like we have a crisis in leadership. And as a result, I felt, while Korn Ferry trains and helps transform thousands of leaders, that's not enough. There's millions of leaders in the world. So we do what we can. But I said, you know what? For people that are in difficult situations or for people that are in good situations, there are things they can do. So I wanted to empower them with the formula. So it's stamina, courage, resilience, persistence, and passion. Those 5 qualities plus social capital, meaning a network around them, is what they need to utilize in order to achieve their greatness objectives, whether it's career or personal.
We already know we want you to come back because we know leadership is a big topic that's certainly playing out already in January of 2026. Ellen Guarino, thank you so much. Always cheer. Always appreciate it. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're coming up on the last hour of trade on this Thursday. Carol Masser along with Tim Stenovec, and we've got a bit of a rally underway, just up about 0.6%. On the S&P 500, good enough for a gain of about 1.1%. NASDAQ 100, a gain of about 1.1%, up almost 200 points. And the Dow Jones Industrial Average, for those who do care, 397 points to the upside, up about 0.8%.
What about the Russell 2000?
Oh, we have seen small caps outperforming.
Yeah, up 1% right now. For a 14th day in a row, it is outperforming the S&P 500.
Yeah, so it's interesting, that rotation that we have certainly seen in parts of the marketplace. I'm Carol Masser along with Tim Stenovec. Let's get, though, to some stocks on the move on this Thursday. Bloomberg News cross-asset reporter Denitsa Sokova with us. And we start with the M&A pursuit of Warner Brothers Discovery. That's going to be a streaming story someday. But anyway, where are we?
Exactly. It's part of the daily news check. We're talking about Netflix. It's very interesting. So Netflix is down more than 2%. Paramount Skydance is up more than 2%. The two respective tickers are NFLX and PSKY. There is yet another extension to a tender offer. The latest date we have is February 20 for the Paramount Skydance offer. The company said it would ask investors to vote against the proposed sale. It's been a pretty rough stretch for Netflix ever since that deal and the talk about it emerged. The company is actually down 38% since its peak. Warner Brothers is planning a special meeting to approve the Netflix deal by April. Paramount has very little time to get their part of the offer. Netflix shares stumbled yesterday. It was a pretty rough day for the company. That's extending that stretch. What we saw, some interesting detail, is closing the Warner Brothers deals will add $275 million costs for this year on top of $60 million spent through the end of 2025. So things are getting more complicated for investors, and they will pile share buybacks. So there was some negativity connected with that.
It's really fascinating. If you go to the Bloomberg and you do graphs on Paramount, Skydance, and Netflix, it's these charts that just kind of go down. It's a good ski slope you might enjoy skiing on. And then you go to Warner Brothers Discovery and you just see it going the other way.
But it's
fascinating.
No matter what happens, Netflix goes down. This.
Well, and Paramount Skydance has been under pressure too.
But Netflix at this point is the clear favorite. And investors don't like that.
Yeah,
they're very concerned about the spend.
When we got the announcement, there was a negative reaction. Now we have announcement of extended tender deal. We still have a negative reaction for Netflix. So
just do it already.
I know.
All right, let's go to Carvana. I've been keeping an eye on this one today.
Very different story. Yes. Company is up more than 4%. Ticker is CVNA. We're seeing a lot of upgrades. The most recent one is Barclays, and it's pretty optimistic. The target is $530, up from $465. Pretty interesting story. They're saying profit increase. They're saying 2026, they raised their volume forecast, but it's coming on top of a lot of bullish sentiment. UBS raised their target. Morgan Stanley had a really interesting note. So they have a super bullish target that they increased earlier this month. The current target is $750. And it's coming back to that self-driving cars. So Carvana is acquiring more of those car dealership in regions that are expanding in self-driving like Phoenix, Dallas, San Diego. And Morgan Stanley is seeing a lot of potential with that. And perhaps some of those additional upgrades we're seeing are happening because of that. And they see potential for partnership with Waymo and Carvana expanding in that field. The company had 100% gain last year.
Well, wait.
It's pretty impressive.
I'm so glad you went there. I pulled it up on the Bloomberg, did the HCPI year function. So it was around a $5 stock at the end of 2022. Since then,
it had some rough times.
It's up 8,800%.
It's incredible.
Since the end of 2022.
It's incredible.
You and I put all our money in there.
And we have Morgan Stanley target of 750. This is their bullish target.
I'm just saying. But you're right.
There were some times where there were concerns about, the viability if you go back to that time.
About 12% of the float is short.
Yes.
Okay.
All right. What's your last one?
Yeah.
Meta. Let's have some good news for tech stocks. They've been under a lot of pressure, and Meta, all of them, has been under a lot of pressure. The company is now up 5.5%. There is some optimism with Jefferies. It's coming off the company being under so much pressure lately, especially against Alphabet and Amazon. They're pretty much saying, oh, this company has been under such a big sell-off that it makes sense to buy it now. They also reiterate their price target, which is very, very bullish. It's $910. They're seeing a lot of optimism there. They're saying they're going to have a lot of new developments in 2026 when it comes to their AI with text and video. That will really help. We're yet to see. But as we know, a lot of the concerns started with their last earnings report. Meta is actually down 18% since then.
Wow.
And we had some pretty big numbers about capital expenditure, around 110 billions. So a lot of pressure from there. It was like a 50% increase year over year.
Right.
So ever since, investors have been pretty jittery about Meta spending. But today, some relief.
Company reports January 28th after market. So we'll see what kind of CapEx spend is going on. All right, good stuff. What?
Next week's going to be a big one.
It's going to be.
It's the week of the quarter that we're all waiting for.
It's also a Fed meeting.
I know.
Fed decision.
Yeah,
it's always a fun one. Denitza, thank you so much. Check out our Stock Movers podcast, 5-minute episodes of the biggest winners and losers in the stock market. Stock market. You know, sometimes I'm just like rushing.
It happens.
And I just like, brr. Anyway, you can find it on Apple, Spotify, anywhere you get your podcasts. If you're watching on TV, the close coming your way. Tim and I continuing on Bloomberg Business Week Daily.
CBS News on the Hour, your home for original reporting.
I'm Jennifer Kuiper. A massive winter storm is expected to impact more than 100 million people over the next several days. CBS News correspondent Cammie McCormick.
From the southern plains to the south and into the east coast, a significant winter storm is bringing heavy snow, ice, and brutal cold. Anthony Love is a fleet supervisor for AAA in Philadelphia.
They're saying up to 20 inches. We're preparing for 20 inches. We have guys starting early. We're expecting the worst.
In Virginia, Governor Abigail Spanberger has signed an emergency declaration.
I am asking all Virginians to stay off the roads as of Saturday night, all day Sunday through Monday morning.
Wind chill temperatures in the northern U.S. could feel like 40 to 50 below zero.
And because of the extreme cold here in Chicago, public schools will be closed tomorrow. Vice President J.D. Vance is in Minneapolis amid unrest over a federal immigration crackdown there. Vance says that the tragedy in Minneapolis is multi-layered.
The tragedy is there was a misunderstanding. The tragedy is that Renee Good lost her life. The tragedy is that you have ICE officers who are going into communities where they're worried that if they call 911, no one's going to come to help them.
The vice president is asking state and local officials for cooperation rather than disruption of federal operations. On Capitol Hill, former special counsel Jack Smith, who investigated President Trump during the Biden administration on election interference and the handling of classified documents at Mar-a-Lago, tells the House Judiciary Committee,
I made my decisions without regard to President Trump's political association, activities, beliefs, or candidacy in the 2024 election.
CBS's Linda Kenyon.
President Trump has renewed his attacks against Jack Smith. On social media, he called him, quote, a deranged animal who shouldn't be allowed to practice law, unquote. Jack Smith dropped his investigations when Trump returned to office, following a Supreme Court ruling stating a sitting president could not be prosecuted.
In an exchange with Democratic Congresswoman Becca Balint of Vermont, Smith was asked about Trump's repeated attacks on him and whether he thinks he will be charged by the Justice Department. Smith replied that the statements are meant to intimidate him and he will not be intimidated. President Trump is putting Hamas on notice as he introduces his Board of Peace on the sidelines of the World Economic Forum and works to bring the Israel-Hamas war to an end.
And, of course, the war in Gaza, which is really coming to an end. We have little fires that we'll put out, but they were giant, massive.
Right now on Wall Street, the Dow, NASDAQ, and S&P 500 are up. The Dow is up 330 points. This is CBS News. The Golden Raspberry, or Razzie, nominations are out. The tongue-in-cheek poke at Hollywood's worst.
The live-action Snow White
Father told me long ago.
and War of the Worlds lead the field with 6 nominations, including Worst Picture. Keeping it in the family,
do not judge your book by its cover.
Sylvester Stallone and his daughter are up for Worst Supporting Actor Razzies. One of the Snow White nominations, all 7 artificial dwarfs are up for Worst Supporting Actor. Previous Oscar winners Natalie Portman and Jared Leto are up for Razzies. Steve Kathan, CBS News.
The Sundance Film Festival kicked off today in Utah, marking the first year without founder Robert Redford and the last year in Park City before moving to Boulder, Colorado next year. Over a dozen films premiere on this opening day, including Rachel Lambert's drama Carousel and Judd Apatow's film about comedian Maria Bamford. Jennifer Kuiper, CBS News.
I'm Bob Burke, founder and chairman.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Hey, guess what, everybody?
What?
It's Friday's Eve.
Yeah, we got 2 hours until we can really say that.
Not like he's counting or anything.
No.
Yes, indeed. 2 hours to go.
Investors are happy if you're long this market on a day like today. We're higher by 1% for the year on the S&P 500, Carol. We're higher by 0.6% just for the day. NASDAQ seeing some buying, 0.9%.
And I think when we kicked off the week, we weren't so sure. We were down, 2% on the NASDAQ on Tuesday with that holiday weekend. I think there was that think of, are we selling America? Like, is everybody backing off? I will say it's still early in the year. We've had a lot of discussions around treasuries with everything that we've seen out of Davos, and certainly the president pushing back on allies. Are we rewriting kind of the global order, and what does it mean for the U.S. position in it? And then what does it mean for U.S. markets?
So that's the view of sort of the backdrop of public equities and how investors might be thinking about public equities and also treasuries this week. We're going to talk a little bit about private markets today.
Right.
We've got Kelly Rodriguez joining us. Forge Global, this is the marketplace for buying private companies. It was bought by Charles Schwab back in November. Still, the acquisition hasn't closed yet. He's joining us from Davos. I want to know what he's hearing from about private companies.
In a year when SpaceX is supposed to IPO and be the biggest ever, I mean, talk about private companies staying private for a long time. OpenAI, think about the money that's going there and still private.
Yeah, on the SpaceX side of things, $800 billion valuation and a private share sale, according to Bloomberg.
Just a little old company.
Yeah.
All right. Looking forward to that. Hey, speaking of private companies, Elon also went to Davos. He talks about robots, which we just heard from Kathy Wood saying that's going to be really what Tesla is about going forward and a big driver financially over there. Max Chafkin on the hype and the reality when it comes to those robots.
Also, the weather pattern that is coming.
You didn't like that, did you?
I did. It was cool.
For those on radio, I was doing a robot.
I just see
thing.
Sid sitting down here, and I want to talk planes and airlines in just a minute. I'm trying to move things forward,
all right,
Carol.
All right,
the weather pattern that's coming. We've got the latest on what airlines are doing ahead of the storm. Our Bloomberg meteorologist, too, has the analysis. Who's getting hit with what weather, how it could affect power, energy, and more.
I know my husband this morning is like, it could be like a foot or so. And I'm like, yeah, this sounds like a really...
You have the snowblower ready?
Yeah, we do actually have.
Really?
You
have a snowblower? Oh, I'm so jealous.
Do not judge us. Do not judge us.
I have a shovel.
All right, let's get to the market trade with less than an hour to go. Here is once again Charlie Schaff.
All right, I thank you very much. We got the airline stocks trading lower right now, and 52 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ 100 index, Russell 2000 index continuing to outperform small caps, by the way, beating the S&P for a 14th straight session. Right now, the Russell 2000 up 0.8%, keeping it in context. S&P up 0.5. The S&P higher by 37, 69.12 where we stand right now. Dow Industrial is up 344, up 0.7%. Nasdaq higher by 200 points, up by 0.9%. 10-year at 4.24%, with the 2-year 3.61%. The cooling of geopolitical tensions, a rally in big tech, and solid economic data all helping the markets today. 10-year at 4.24%, the 2-year 3.61%. Spot gold up $90 the ounce, $49.22, up 1.9%. Silver $96.22, up 3.4%, and a retreat for West Texas Intermediate crude $59.33 a barrel. WTI down 2.1%. As for the market backdrop and what is behind today's move higher, Liz Ann Saunders is chief investment strategist at Charles Schwab, and she was a guest today on Bloomberg Open Interest.
I think it really is the buy the dip mentality, because the rebound trade off of Tuesday's weakness came in advance of the framework deal that was announced. And I think that's just become ingrained in the cohort represented by retail traders. That's distinct from longer term traditional individual investors.
Liz Ann Saunders of Charles Schwab. In the banking industry, President Trump is suing J.P. Morgan Chase and its CEO Jamie Dimon for at least $5 billion over allegations that the lender stopped offering him and his businesses banking services for political reasons. J.P. Morgan Chase shares, they're up 0.5%. And Bank of America and Citigroup said to be exploring options they could offer up as an olive branch to satisfy President Trump's demand to cap credit card rates at 10% for a year. Bank of America up 0.8. Citigroup shares up 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Appreciate it. U.S. Airlines already announcing backup plans for passengers ahead of this expected winter storm this weekend. It could be the biggest of the season. It could cause massive disruptions to air traffic nationwide.
Yeah, I mean, this is going to be crazy. Sid Phillip is chief correspondent, global aviation for Bloomberg News. He joins us here in our Bloomberg Interactive Brokers studio. Yeah, you're seeing flight cancellations. How disruptive might this storm be?
We still need to see what sort of pans out, but it does look like it's going to be disruptive across the eastern seaboard of the U.S. as well as the south. And so we're seeing airlines preemptively ask passengers that if you want to change your travel, you could potentially look at alternative options. So Delta Airlines is offering that to customers booked from 41 airports. United is talking about 61 airports. American Airlines is about 34. And so everyone's sort of allowing flexibility.
Is this a different type of storm because of just how much of the country it could affect? You have United's big hub in Atlanta. You have Newark here, which could get hit with quite a bit of weather. United hub. You have JFK and LaGuardia in New York. Certainly big for American Airlines.
Exactly. It's big for all the airlines, and especially because it's such an important part of the US that sees so much traffic. That's why it's sort of important for the airlines. And also because planes are then sort of out of place and out of position. And that sort of makes things much more complicated, where you have planes are sort of flying multiple routes in multiple segments a day. And if you can't really get one off the ground, then you could have a cascading effect on your schedule.
I'm apologies. I might have said United Airlines in Atlanta. No, it's Delta is the huge.
But you know that you're the.
Yeah, I don't know how.
I mean,
it's
you
literally
are the airline guy, but this guy is obsessed.
What is written in our notes?
What?
Delta with its main hub in Atlanta.
I know.
It's right there. I just misspoke.
Hey, I'm always curious when airlines, they know this might be coming. It looks pretty ominous based on radar maps and so on and so forth. But you're right. We're still Thursday, Friday. Storms we know do shift. But having said that, what do they try to do? Do they try to get planes where there isn't going to be snow and they can, so that the tarmacs can be cleaned more easily? Like what's the process that's going on right now?
So for the airlines, it's more about making sure your planes are in the right position. So if you're unlikely to see those planes taking off from New York or JFK or from LaGuardia, then you sort of fly those planes on alternative routes and have them in different locations so that they can then operate whatever flights you can operate. Because otherwise, what tends to happen is you get crews timing out, you get planes that are stuck on the ground, you have passengers that need to be reaccommodated and sort of put up for somewhere while the delay is ongoing. And so it sort of causes lots of cascading impact for the airlines. And so they'd rather not have those flights either taking off or preemptively cancel some flights in order just to reduce the stress on the system and being able to sort of, when the storm passes, you can sort of quickly reboot your operations and go from there.
So it's not necessarily just a follow. It's not like, if we're going to get a ton of snow here, they try to get all the planes out of here. That's not necessarily the case.
It's mainly to get...
You're planning ahead for after.
Exactly.
Okay.
It's mainly to get sort of the planes right in position, get the planes actually being able to fly, actually being able to be used on time and follow the schedules that they need to follow.
Matt Miller is sending me IBs right now.
Matt never sends me IBs anymore.
Well, he's sending it to you too.
Oh, is he?
Yeah, it's sending to both of us. He says, go to WSL Predict on the terminal and you can look at Polymarket data.
Oh, right.
That shows how many inches of snow in New York City this weekend, the predictions for that. So 35% say 8 to 10 inches. 20% is 10 to 12, 14%, 14 or more inches. I mean, there are some parts, you see it there on the terminal, WSL Predict. It looks great. Thank you to our team for getting that up so quickly.
For those on radio, they can't see it, but it's showing
cool.
us what's the likelihood of in terms of how much snow we get.
So if you are an airline and you get, take us through what these companies need to be doing to the runways. They need to clear them of snow. They need to be de-icing planes. That's incredibly expensive.
And that's incredibly time consuming.
And it hits the bottom line. I mean, you would have potentially these companies telling us 3 months from now, this storm could have some sort of economic effect on earnings?
Absolutely. I mean, you could, if it has a big enough impact on earnings, you could see the airlines talking about it. You could see the airlines talking about how it impacted their quality performance because of the disruption, the cost of the disruption, the cost of having to have crews working their workers working overtime, having to reaccommodate passengers who've been stranded somewhere. So it's a really expensive proposition for the airlines. I mean, the airports, the airport operators tend to take care of the clearing of the runways and all of those, keeping all those things clear. But yes, the de-icing process takes forever. And as you're sitting on a plane waiting for it to be de-iced, that sort of adds to the sort of delays on those flights. And then you have aircraft that should have been flying 4 segments in a day, only being able to do 2. And then you lead to cancellations on the last 2 of those segments. You could also have pilots then cabin crew timing out because they have maximum hours. And so then you have planes that don't have pilots that are waiting to take off. So essentially, it creates all sorts of havoc for the airlines.
Silver lining, it could be the holiday weekend. It could have been the holiday. I mean, it has something. I mean, I don't know how busy. I mean, people are flying around. We know that. And people are taking vacations, right, to get out of the cold weather. But I guess we'll have to wait and see how long it is, how bad it is. How quickly do those airports get up and running? Like as soon as the storm's over, they're up and running?
Usually they're pretty quick at getting them back up and going. As soon as the storm passes, things tend to improve quite rapidly.
Before we let you go, United Airlines out with results yesterday. The company warning that geopolitical tensions risk disrupting what's been, quote, a pretty hot start to the year. What is unique about United's routes that make it so exposed?
So United flies a lot of international routes, and they're the biggest US international carrier, and so they fly across the world. And we tend to see, I mean, once Canada, we've seen demand fall off for Canada. We've seen demand from China not really coming back from the pandemic. And so all those sort of implications tend to have sort of effects on airlines being able to sort of monetize it. I mean, remember that all the airlines are talking about how business class travelers, both on domestic and on long haul flights, are sort of propping up their balance sheets. And so when you have those high paying customers no longer flying with you, that's when things start getting tricky.
Sid Phillip, Chief Correspondent for Global Aviation for Bloomberg News. He joins us here in the Bloomberg Interactive Brokers studio. Up next, after years of trashing it, Elon Musk is going to Davos. Well, he's there. He was there. He made news. We're covering that next.
He's got robots to talk about. Hey, you are listening and watching Bloomberg Business Week Daily. It is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide, learn how to add metals to your IRA or 401k tax and penalty free. Head to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. All right, stick around. Carol Masterton, Stenivek, live here on Bloomberg Business Week Daily. We're counting you down to the close. More when we come back.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet with the Dow, the S&P, NASDAQ, all advancing. Right now, we have got 39 minutes to go ahead of the closing bell. S&P up 39 at 69.15. That is a gain of 0.6%. The cooling of geopolitical tensions, a rally in big tech, and solid economic data, all fueling gains in stocks. The Dow up 355, up 0.7%. The NASDAQ Composite Index up 209. That is a gain of of 0.9%. The Russell 2000 index up 0.9%. Once again, outperforming the S&P 500 index. We've got the 10-year yielding 4.24% with the 2-year 3.61%. Gold right now up $94 the ounce to $49.26, up by about 2%. Silver up 3.4%, and Bitcoin down by 0.5%. Amanda Agati is Chief Investment Officer for Asset Management at PNC Bank. And on surveillance this morning, she discussed the market outlook.
If we can just get a little bit of peace and calm on the purple haze policy front, maybe given today's talk about the weather, it's a blizzard of policy uncertainty, the market can refocus on the underlying fundamentals. And we think the underlying fundamentals are really strong and set the stage for another strong year.
PNC's Amanda Agati. By the way, you can hear more of that conversation on the Surveillance podcast. You can download that wherever you get your podcasts. Coming up after the close of trading, we will be hearing from Intel. Also, Capital One Financial. Intel right now down 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks, Charlie, for that update. What were you saying, Carol?
I might stay with you here a little
Okay,
bit.
that's
In
okay.
case I just kind of said that.
The World Economic Forum in Davos.
I heard of it.
Okay. He's called it, quote, boring. He slammed the group as a body that's increasingly becoming an unelected world government that the people never asked for and don't want.
So he's like, I'm never going to go to that thing. That's ridiculous. Why? Like, who would waste their time there?
He we're talking about is Elon Musk.
Correct.
And those are things that he said about the World Economic Forum in the past. Yet today, for the first time, he made an appearance.
He showed up, didn't he?
He showed up and
Do you think he was
made
like,
some news.
hey, it's Elon. I've been busy at the factory, but
Listen,
I'd like to come to Davos.
I don't know how it works. He was confirmed as a last-minute addition for a Thursday afternoon session. He spoke to BlackRock CEO Larry Fink. Here's just part of that conversation.
We do have some of the Tesla Optimus robots doing simple tasks in the factory. We expect probably later this year. By the end of this year, I think they'll be doing more complex tasks, but still deployed in an industrial environment. and probably sometime next year, I'd say that by the end of next year, I think would be selling humanoid robots to the public. That's when we are confident that it's very high reliability, very high safety. And the range of functionality is also very high. You can basically ask it to do anything you'd like.
You're already seeing that in Tesla cars. The software changes that you're doing. And what is it? Yeah. Every quarter now, a software change that upgrades the ability of the robot within the car?
Yes. The Tesla full self-driving software, we update it sometimes once a week. Recently, some of the insurance companies have said that it is actually so safe when Tesla full self-driving is so safe that they're offering customers half-price insurance if they use Tesla full self-driving in their car.
And that can be monitored by the insurance company? Is that part of the agreement then?
Yeah. I think self-driving cars is essentially a solved problem at this point.
Right.
And Tesla's rolled out sort of robotaxi service in a few cities, and
right.
will I think be very, very widespread by the end of this year within the U.S. And then we hope to get supervised full self-driving approval in Europe, hopefully next month.
Really that quickly?
Yeah, and then maybe a similar timing for China, hopefully.
Well, there you have it. That was Elon Musk along with Larry Fink, the CEO of BlackRock. For more on that appearance at Davos, we're joined by Max Shafkin. He's Bloomberg Businessweek senior reporter. He's co-host of the Everybody's Business podcast. He's also the author of The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power. He joins us here in the Bloomberg Interactive Brokers studio. A lot of timelines laid out just in that 2.5 minutes. And that was just part of what he said today. I know you're excited, Carol, for the Optimus robots to be sold at the next year because Elon.
I'm already creating a bedroom for one at my home.
They don't need a bedroom. That's what's so great about them.
Just got to plug them in, right?
Charge them, and then they just do the dishes.
Don't eat.
Is that a realistic thing based on your observations of Tesla and where they are right now with these Optimus robots?
I don't think it's a realistic thing for any humanoid robot, whether it's Elon Musk's humanoid robots or not. I mean, there are prototypes of these things, but of course, it's a big jump from going from a prototype to putting these in environments where unpredictable things have happened. That's the reason why Elon Musk for 10 years or so has been saying self-driving cars are going to happen next year, and we're still not quite there yet. There was a demo today in Austin, another demo, but again, these are very controlled. We're not seeing the kind of mass market adoption, unsupervised kind of robotics that Elon Musk that had been talking about and that we're all, frankly hoping for. It would be nice to have a dishes doing robot in our home.
Do it all, take the garbage out and everything. But, it's interesting. We had a conversation with Hannah Elliott today, the auto columnist here at
It'll
Bloomberg.
be in our weekend show.
It will be in our weekend show. And she recently went out in a Mercedes that has kind of their two different programs, really, when it comes to self-driving. And she was blown away.
But it doesn't, she drew a distinction for us, and I'm, giving a preview for our conversation that airs Saturday. There's a distinction between Mercedes technology that runs on NVIDIA and Tesla's technology for FSD, which is fully supported by cameras. Mercedes technology that she writes about
She's blown away.
Has the cameras, but also additional sensors. It's more akin to a Waymo.
Right. Yeah. Waymo is betting on this. And as you said, many other people are betting on these kind of multi-sensor approaches. There are a lot of critics of Tesla, including some very strong critics who basically say this is impossible. Elon Musk's argument has been all along, hey, you drive with two eyes, therefore cameras should be fine. I don't think we know the answer to that question. I mean, that is the argument he makes.
But I will say the brain for as challenging as a lot of interpersonal relationships are, the brain is so powerful when it comes to making these split-second decisions that haven't yet been proved. I mean, Elon just now
and yet the brain causes us to often get distracted by picking up our phone or reaching and doing things. So it's
that's a good point.
I don't know.
Well, I mean, I do think that, and Musk made the point about insurance rates and full self-driving.
Right.
We are seeing, whatever your view is in terms of the realistic nature of these kind of robotaxi timelines, we're seeing huge advances in driver assistance. And that is where Elon Musk, to his credit, he doesn't talk about it this way, but if you just see Tesla's autopilot and full self-driving as a driver assistance system, it's pretty promising. You do have to be engaged, you have to be looking. It's not a substitute for your own eyes and your own judgment, but it could augment that process. And you're seeing kind of a distinction in terms of how some automakers are sort of focusing on that path, while others are going the kind of Waymo, full self-driving route. Musk, I think, is essentially keeping both options open. He has the sort of robotaxi demo in Austin, but also there are many normal cars with this software built in.
I guess, and I think part of the reason I brought up Hannah is just how she was blown away, I think, by the technology and how great it was. And I just think about, we talk about these robots. Could they possibly, though, I'm looking at advancements in technology, AI, moving along pretty fast, that it could actually happen sooner rather than later. Like, I
mean, anything's possible, but you don't. But even Elon Musk even talks about this. There is this thing where getting 99% of the way is very easy. And that last 1%, no one quite knows just how it is. Yeah. And we're talking again about big, heavy machines, industrial robots. There are very advanced industrial robots in factories that can do, fine motor skills, but the factories have, yellow tape around them because you don't want to get too close to the robot because these are heavy machines. They could hurt somebody. And there's going to be a very high bar before putting one of these Optimi in your home. It's not, especially, it not only has to do the dish, it has to be better than your current dishwasher.
We'll see what the consequence is if you do not call it by the proper name.
And if they don't stack the dishes the way I like it, there's a problem.
Talk about relationship challenges. The self-driving car is a solved problem, is what Elon Musk said to Larry Fink earlier today. If maybe from a technological perspective, it's a solved problem, but you're only seeing Waymos in a handful of cities. The robo-taxis from Tesla are only available in a handful of cities. And is it a solved problem in your view?
No. It's obviously not a solved problem. It'll be a solved problem when we all have self-driving cars.
Right.
But, if from the point of view of Elon Musk, from the point of view of Tesla investors, they have a big lead. Elon Musk, in his mind, they are just going to get there. You brought up why is he going to Davos right now? I think part of the reason he's going to Davos is because a lot of eyes are on Davos because Donald Trump was there. Elon Musk is really good at figuring out where the news cameras are pointed, where the kind of conversation is and putting himself there. So he's going there and he's talking his book. He's talking about driverless cars while there's a lot of focus on this conference.
But having said that too, coming off of CES 2026, right? We talked too about the focus on robots or robotics. And it does feel like that's where the world is going next.
Oh, yeah. There's definitely a lot. I mean, there's tons of investment here. And part of the reason is there are these amazing advancements in AI, and yet we haven't quite figured out how to commercialize them. So there are all sorts of efforts to find a commercial a way to make money on this thing. And of course, humanoid robots are one of these options. There are lots of humanoid robot companies in China right now that are also racing to compete with Optimus.
So mission accomplished for Elon at Davos. We're talking about, he made a lot of news. A lot was written about him. We're talking about him right now. He got the attention, but he could do that anywhere he goes.
It's true, although I think he likes to, put himself at the center. And again, I mean, Davos has, in a way that it's hard for me to remember. It's been a few years where, with Trump making these Greenland threats, him flying there was just so much attention on this thing, and it almost feels like Musk is trying to get himself, back close to Trump as well, being in the kind of, even though I think they just passed like ships in the night, but it's hard not to see. Their proximity is getting closer.
They didn't fly there together.
No, not yet.
Not yet. Having said that, we wrapped up the year doing a really fun conversation with you, like kind of the Elon year in review 2025, because there was a lot. If you think about when President Trump came into the White House and Doge, how are you thinking about Elon this year right now?
Well, I think the big question on the business side is SpaceX and the possible SpaceX IPO. I mean, we're going to see a lot of companies try to do IPOs, I think, in the next year or so for lots of reasons.
You say possible. Is it a given, or we shouldn't assume that it's definitely going to happen?
I mean, it hasn't happened. Yeah. I mean, until they file, I wouldn't assume it. Lots of companies sort of talk about that. And if the market changes, I think watching that SpaceX IPO, how much demand is there? How much is it worth? How does that affect the rest of Elon Musk's empire? How does that play with Tesla and the challenges at Tesla? And then the other story, the big one, is the midterm. And what is Elon Musk's role going to be as we head toward this election?
Yeah, I thought I heard already some
$10 million
bucks. Yeah, in a Kentucky Senate race.
Yep, off and running. We'll be coming back to Max. We know that. Max Chapkin, thank you so much. Bloomberg Business Week senior reporter, co-host of Everybody's Business Podcast. Check it out on the weekend.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. Russell 2000 index continues to outperform. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Shai. That's right. U.S. stocks are in the green, but off their best levels. The Dow is still up 258 points. S&Ps are higher by 0.4%, and NASDAQ is up by 0.7%. The U.S. 10 yield is at 4.25. Gold is up 2%. Oil is under pressure, and Bitcoin is trading lower by 0.4%. Among the main 11 S&P sectors, leaders were telecom and consumer discretionary. Real estate was under pressure, and leaders to the upside in the Dow, Procter & Gamble and 3M, while Merck fell 1.5% and led to the downside. After earnings, Abbott Labs fell 10%, GE dropped 6%, and in the credit card space, Bank of America and Citigroup are weighing new credit cards with a 10% cap. In the tech space, Autodesk to cut about 7% of its workforce. And wrapping things up, Intel reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I've been driving all night, my hands wet on the wheel.
Come on, let's take a drive.
A drive?
Yeah, a drive.
Can you just focus on driving? Focus on the road.
Driving in your car. Why would I drive fast?
Because I'm asking you to.
Just take your place in the driver's seat.
Just drive, baby.
Driver's seat.
This is the Drive to the Close.
Where we're going, we don't need roads.
On Bloomberg Radio.
All right, everybody, just about 18 minutes away from the closing bell on this Thursday. Carol Massar along with Tim Stanovic live here at Bloomberg Business Week Daily. Let's drive to the close because certainly on our minds is what's going on with the consumer. We did get some data today. U.S. consumer spending rising solidly in back-to-back gains. You kind of have that going on. We had jobless claims steady at $200,000 in a sign of low layoffs. And the U.S. economy expanding at a revised 4.4% in the third quarter. So, some reads on the economy, and we'll see whether or not this is all